Hi, welcome to Slay the Spider. I'm Jim B, and I'm the creator and host of Slay the Spider. Shares of the S&P 500 are called S&P Depository Receipts, SPDRs. Spiders. Slay the Spider means I intend to beat the S&P 500 quite substantially. There are three major influences on the movement of stock price, according to a study by Benny King. 80% of your investment success will be due to the movement of the sector and the market. Now you can view a weekly snapshot image of the market and the sectors. This is a snapshot from April 9th, 2021. The red arrow, pointing towards the 2 o'clock position, represents the market. The rectangles each represent a mini-sector. They are color-coded to the sector they represent. Healthcare mini-sectors are in red, technology is dark blue, financials are green, media communications are brown, industrials are purple, consumer discretionary are light blue, and all the others are gray. I've been charting this movement since 1998 over more than 25 cycles using this exact mix of 40 mini-sectors. The key to understanding the movement and what makes the cycle predictable are the psychological stages that investors experience as they go through complete market cycles. It rarely changes. These stages are on the outside border of the circle. The placement of the sectors and the market are completely data driven. The interpretation of what to expect next is from my experience of going through the cycle dozens of times. I'm not always perfect, but the beauty of the circle is that it corrects me quickly when I don't get my prediction absolutely correct. I've learned it's okay to be wrong now and then, but absolutely abysmal to stay wrong when the data says otherwise. This week, all three of the healthcare mini sectors rose slightly. Same for the media communications mini sectors, with all three rising. In technology, electronics and software rose, while computers and semiconductors declined a bit. In consumer discretionary mini sectors, all the sectors rose. Household products, gaming, retail, restaurants, and leisure. Gaming, a small sector, crossed back to the bullish side as Nevada is going to 80% occupancy May 1st and 100% occupancy June 1st. It's already getting crowded here, and only half the Uber and Lyft requests are getting rides. Finance was pretty flat, with Wall Street and finance advancing slightly, while savings and loans declined. The industrials saw aero defense, metals, steel, and machinery tools advance slightly. Precious metals rose, electric utilities declined, textiles rose sharply and went to the bull side. Forest products and transports rose slightly, business products and food declined, protection safety rose, and in the biggest move of the week, oils and oil services moved up sharply and crossed back to the bullish side as oil and gasoline prices continue up. Gas utilities rose slightly. 1,031 stocks reported earnings this past week. Included in the 1,031 reporting this week was just over a third of them being S&P 500 stocks. Over 80% of the 1,031 reporting exceeded the analysts' expectations on revenues and earnings. Normally, that would be a very bullish week. Overall, we moved back up from 71 to 79, 2 steps forward, 1 step back. Despite over 800 companies exceeding earnings expectations, the S&P 500 closed exactly 1.00 points higher for the week. The Dow Jones Industrial Average lost 242 points for the week, down 0.7%. Nasdaq lost just over 50 points, down 0.36%. Pretty lackluster results for such a busy earnings period. I currently have 0 stocks in my portfolio. I'm all cash and some 20-year Treasury ETF shares, which I expect to do well in a market downturn. My fear of missing out of any potential gains from the stock market is next to zero compared to my fear of losing a substantial amount in a severe market downturn. My reasons for this fear of a severe market downturn are: 1. My experience charting the markets for decades. We're at the start of the 4 o'clock loop on my chart. It has always resulted in a significant downturn. 2. The market price to earnings ratio is above 42, which has only happened twice before in 125 years. The laws of finance have not changed. Stocks are severely overpriced. 3. The short interest in the markets is now at a 17-year low. The path to a severe downturn is now in place. Those people who practice shorting the market will now have to borrow and sell stocks to participate in the downturn, which will in effect make the initial downturn much more severe. Fourth, $579 billion in equity deposits over the past 5 months have not propelled the markets up. Fifth, several big tech names have generated point-and-figure sell signals already. Intel, Salesforce, Micron, Texas Instruments, Applied Materials, KLA-Tencor, to name a few. Several more have broken their 50-day moving averages, and that does not generate a point-and-figure sell signal, but it does generate a technical trading sell signal. Other big names like Apple, Lam Research, and NVIDIA are right on the brink of sell signals right now. There are 16 events while going around the SPiDeR circle. We've just started the 4 o'clock loop, which is one of the more interesting and exciting events. It's highlighted in red. The 4 o'clock loop will last from 8 to 12 weeks. It's usually characterized by a large increase in volatility and presents some extraordinary opportunities, especially for options players. This weekend, my paid subscribers will get a detailed description of what to expect and how to take advantage of what is expected to occur during this stage. Pay very close attention to this subscriber-only email because I will tell you how to take advantage of this unique opportunity, nearly risk-free and at very low cost. You can easily pay for a founder subscription with just one trade while risking just $100 to $200. I went bankrupt for medical reasons when my wife had a terminal illness. I will turn 69 later this month, and I don't have time to build my investments in a normal fashion. I need to do something right now to solve my financial situation. This last week, I laid out a detailed plan to turn a small amount of money into a life-changing amount over the next 2 stages of my Slay the SPiDeR chart. I've identified 12 expected actionable events, but it's quite possible to reach my goal in less than that. And I've designed it to allow failure once or twice along the way. I've previously successfully acted on most of these actionable events. I've set aside funds, $1,500, to finance the first month of this operation. It will cost me about $300 a week until the first event occurs. I do not know exactly when that event will occur, but I'm prepared to buy $300 of call options every week so that I'm already in when it actually begins. Once the first event occurs, the entire operation becomes self-funding. Hopefully, it will be in the next week or two rather than 5 or 6 weeks away. I'm pretty sure it's going to happen soon. I will be sending my paid subscribers the exact details of what I am doing and planning, event by event. I will send my paid subscribers proof of my purchases as they are opened and closed. You can choose to do the same thing if you wish. I do not know what your financial situation is, but I'm guessing you would also enjoy trying to turn less than $1,000 into $1.2 million after taxes over the next few months too. That's my goal for myself. Paid subscribers can expect the details of the first event in the next 24 hours. I have it mostly written already. Paid subscriptions are now available. They're $15 a month on a month-to-month basis. On an annual basis, it's $144 or $12 per month. 90-day free trial and no credit card is required. Thanks for watching my Slay the Spider video this week. For those of you who are new, so far this year we've gone through about 8 of the events on the Slay the Spider Circle, and I called all 8 of them correctly. And for those of you who watched everything since January, you're welcome. See you next week. Thanks.